Good morning, everyone. This is Rose. Just doing a quick audio and video check. Let's just wait for everyone to join. Good morning. Good morning. Good morning. All right, brand new week. Just going through quick news items, see what's scheduled this week. All right. We have Dallas Fed Manufacturing Survey at 10:30 a.m. Eastern Time. A couple of bill auctions, 3 month, 6 month, and 2 p.m. We have a Fed member, Mary Daly, is scheduled to speak at 2 p.m. Eastern Time today. So just pay attention to that. Tomorrow, Tuesday, it's starting around 8:30 and 9. Home prices and then consumer confidence at 10 a.m. Richmond Fed manufacturing also 10 a.m. Dallas is today and Richmond is tomorrow. And then bill auctions, but let me see. There's a 2-year note auction 1 p.m. tomorrow. You have Lisa Cook scheduled noon. Money supply. I don't think we need to worry about that, but in the afternoon also another Fed member, 2:15 scheduled. On Wednesday, new home sales, 10 a.m. You got, if you're trading oil, you have the inventories, oil inventories coming up. 10:30 on Wednesday. Thursday is a big day. We got the GDP, 8:30, durable goods, international trading goods, all 8:30, jobless claims, 8:30. So Thursday, 8:30 a.m. Eastern Time is big news item. A bunch of actually big news items. Pending home sales, 10, and then is several bill auctions scheduled, note auctions and bill auctions in the afternoon. And on Friday, you have personal income outlay, Chicago PMI 945, consumer sentiment 10, and of course, Fed members in the afternoon. So Thursday is the big news day. Other than that, I think it's going to be a quiet week, but we'll see. So let's begin with the daily, let's take a look at monthly. Okay, so we are, as predicted, going above those trend lines, but they are shifted a little bit, so I need to fix those. When the contract changes happen, graphical elements starts to shift on Ninja charts. If you're a Ninja user, you'd know this already. Yeah. All right, nothing major. Let me fix that. Month of June, still pretty bullish, and the market is still making its way up, but some profit taking began, but mostly last week we were up, so we didn't get much of sell-off or any kind of bearish pressure, so bears are not all that happy, and you can see on the monthly chart why that is. I said we're going to go and test this 2 trend lines and most likely test way above it, and that's what we have done. So you can see that this month I said we're probably going to breach above it. We need to trap the bulls before coming back down. This trend line needs to be broken. Once we break these trend lines, this one especially, let me make that a little darker. which takes the priority. So then comes this one, and I'll make this a little lighter. Okay. Then this one. First, we need to break this one. That means if we do break this trend line, that means we're going to come down and possibly test the lows, but market is looking for a double bottom, another bull flag opportunity to go back and test the highs. We do have a support here. Even if with the new month, perhaps if we somehow trap the bulls and July starts to come down, could go sideways first. But if it starts to come down, or this month, today is 24, who knows, we could become bearish, start to bring this bar down. First, the April 19 high, but you can see right here is breakout test area. So even if we break this trend line, I think the buyers will be ready below the trend line, wanting to reverse it back up. However, we could also test the high, which is the breakout point around here, and not able to break this trend line. So it would be a touch of the trend line, and we could just go back up again. Some of the banks are predicting 6,000 as target. So I could see why they're trying to, they see the 6,000 possibly we could reach. You got a leg 1 pullback, leg 2 pullback. We're in leg 3, and the leg 3 hasn't really extended all that well. Excuse me. But once it starts, see this right here? This is what I'm interested. You see the close of April 19 or the open of May I think it's going to be a good place market to finally, but we need to go sideways, make a double top, break this, retest, and then start to come down. This is where buyers are waiting once again. I think that's what we're going to do. But again, no trap, no coming down. We're in the third leg. We might need to go sideways, make a double top, maybe lower high, then start to come down and descend, and then the EMA would go like that. Probably all these trend lines are converging right here, so then we could perhaps bounce. Let's see what else. Weekly, we haven't really reached a weekly measured move target up there. Is weekly charts, we have leg 1 pullback, leg 2, but look at this right here. This is pretty strong bullish move, extended pretty long time. This trading range broke out, so you have a breakout right there. And I thought I did these last week. Maybe I crashed the application and never saved it, or it probably reverted back to old version, because I remember moving these around. And let's see, it's gonna bother me if I don't move them once again, and let me save one more time. Alright, let's see, do I have an outside bar here? I don't have an outside inside bar combo here, therefore I'm using April weekly bar. Market is still in the breakout mode, but you could see that the profit taken is pretty strong as of last week. So, but it's not a good sell signal bar to begin with. It only reached a half hour. I always know any time frame, I will always take some profit there and then look for weak bearishness and market to continue to go up. That's what I would look for. So it is possible that the market continue to be bullish, and we could reach 56.83. But you do have leg 1 pullback, leg 2. we might need to pull back before going back up again. So we might get some, we're already getting some kind of a after hours side. Let me see. We had a little bit of sell-off pre-market Sunday open, but it really put us into trading range rather than bearish trend. So the market could be looking for a support to reverse back up at the open. So that means is what, let's see where we are. We're at 55.28. So we are not all that far away. We're just around here. We could open up around here and then continue to go up. I like to see market actually keep pushing. But if we start to come down, then I would look for this week to become very bearish. Then I would target these breakout points and then look for buyers once again. On the daily we had you could see right here, breakout, bad follow through, market came back down. We don't have an inside, outside, inside, but this is a pullback. We could get bulls. We're right around here. So if we get maybe another low, that would give us a 1, 2, 3 wedge bottom, and the bulls could show up. But this is where I would like to see market to test again this gap area. Okay, so if we do come down and make a wedge bottom, maybe test these highs, maybe keep a gap open there, maintain this bullish gap body, and then keep the gap open, not close it, then bulls will try to get back into here. This is where sellers might be, and we might come down again. But if the bulls close this gap, okay, we could go up, come back down, and go back up again. Okay, notice here. I like to count legs to see if we are near exhaustion. So this is leg 1, keeps going up, and then finally pulls back. Leg 2 pulls, that's a pullback bar. Then leg 3. So now if this is leg 3, what does this need? It needs a double top, lower high, come down, and then start to move into the moving average. Bears want to bring market to the moving average, somewhere around here, okay? Turn the market as bearish as possible, but you got a gap here, so the bulls are present there, okay? Also, for pullback, I'm still using this bars range because that is the last outside is inside breakout. So we had breakout targets met. I have been bullish, but now we pull back to this breakout target, but we might come back and test actual breakout of this bars range and then look for buyers. You do have 3 legs, so therefore here's a pullback, here's another pullback, and then we extend up. I don't think the sell-off is not going to be all that crazy. We're going to have to go back and test the high because the tight bull channel. So if market pulls back, I'm trying to find a common, let me see if I can, I'm going to tighten that up and use this trend line. If we break this, okay, probably buyers waiting underneath. I don't think they're going to allow too much selling. We could bounce around here. Even if we come down, you know what, I'm going to use the absolute highs and lows instead of finding these merge wick areas. So we might actually pull back into here before bouncing. I'm going to look for a market to become bullish once again. We'll see. We might just come in here and then bounce. But just for kicks, keep that as well. Okay. somewhere here we could pull in and then bounce again. Market is bullish, but we're getting some strong bear bars, but no follow through. So how does how does that look on bears? Not all that strong. Bears need consecutive bear bars to start some kind of a sell pressure. And if it does, we might pull into this tight trading range area, breakout points. I think the buyers are waiting once again there. So hourly chart, I updated my weekly levels. I always look at the last week's range, Monday through Friday. So here's Monday, here's Tuesday, Wednesday is Thursday, and Fridays. Wednesday was half day. So we had first part of the week was bullish, then we formed some kind of a head and shoulders pattern, broke the neckline, retest the neckline, unless you cannot see the neckline. Here is the neckline. Broke the neckline, retested the neckline. That created a double top bear flag with a lower high. Many did sell underneath that bar. And you can see there's a wedge bottom. Reverses back up. You got a leg, leg, and leg, right? But it could be forming another bear flag in the form of a triangle. Market could come down, like I said, right? On the daily, it might need to come down a little bit. Form a wedge bottom, maybe 1, 2, and 3, a lot more balanced, but you could see there's a gap here. That gap could create a double bottom and we could go right back up again. I don't know if we go all the way up, but that tight trading range is going to be somewhere we might retest before coming back down. So if we start to come down at the open, that breakout test, which we tested already and bounced, but nothing good bullish there. So this triangle is, if it decides to come down, although bears are not doing all that great, they try to sell once, they try to sell twice, but still could come down here. I'm going to look for buyers. I'm going to look for a reversal back up. Into here first, I'll probably take profit there. If I see strong bull bars, I'm going to target this bear area, but if the price gets back up there, it's going to want to close that gap. That means if the gap closes there, then yes, we can go test these highs. So pulling back into here, I have a threshold line. We might test around here, go sideways, and then reverse back up. However, if the bulls do show up at the open, we're definitely going to retest this area, which is gap. Okay, there could be sellers there. We could get a double top there. But if we close it, then the bulls see already a bull flag with higher low, inverse head and shoulders. They want to test these highs, but any pattern can fail. So a bit of a trading range here, trading range high and a trading range low. You can see right here is bears are betting against bull closes. Bulls are betting against bear close. A lot of fade going on there. So if the bulls do show up, there are bears waiting up here with the heart of the trading range. We could come back down. We could go back up. If we break it, then I'm going to target this area. So it's going to be up, down, or down and reverse back up. So we're kind of in the middle of this last week's trading range. So it's now 55, 30, 75, 31. We are right here, very close to the mid-range. Not really excited about that one. Make that dash. Much better. Okay. That's the midpoint. Globex session. I was trading this yesterday, and I sold. I was right here. I sold. I bought, and then my favorite show supposed to start at 9, and then HBO decided to pulled the rug underneath me. It's just, I don't know what they did. They blocked my view of the show, so I couldn't watch it. I said, get back to the charts. And then this started to come down. Hey, I will take that. Forget it. I'll watch the show tomorrow. I ended up trading this, but you're in a trading range, so you're not going to go too far. It's looking for 1, 2, 3 wedge bottom, or undershoot, overshoot, a higher low, major trend reversal is about to show up. But I didn't trade any of this reversal. I just took the profit and closed it was just too late for me. I don't like trading late hours, especially on a Sunday when I'm about to work. So there were a couple of traders from Asia trading. I didn't get back to the Discord. I posted this. I was too excited to trade this, and I figured people are probably watching the show, didn't want to distract anybody. So but I did trade this. If anybody caught this reversal, good for you. You can see that there is a wedge. Bear flag failed, right? So we're not taking these lows. And right there, we have a squeeze happening there. You can buy above this, or you can look for a confirmation bar, and then the market just goes up. But again, you're in a trading range, so somewhere around there, maybe this area is where we're going. We didn't really touch that. Came back down. That's because they took this into consideration. So it doesn't matter. I will take this into consideration. And if it's coming down, I know it's going to try to go back up again. But it can't go and test the high, so it's coming back down. So a strong bear leg like that with consecutive bear bars closing on their lows. First pullback, we're going to get a resistance. You should look for a bear flag. Here comes the bear flag this time. Look at the bear flag here. Look at the bear flag here. You see the difference? You can see, right? So here is your channel. Here is your channel, right? We broke it. Look, they tried to break, fail. They broke it, and they did not fail. So here is retest of that, and then here is your second sell. I'd sell underneath that bar, stop above, but look, this is the first sell, right? If you sell this, it's going to want to go back and retest this, right? So, or you could, here, I could take that. Here we go. So here's a break, right? And you need the second sell. You sell right now, you're going to get stuck. Goes and retests it. Now you're looking for a bear bar. Do you see a bear bar? Instead, they close the bull bar. There's nothing to sell here. And then they close above the trend line. You can go long. You're going to target this area. You're going to target those wicks. You're going to target those highs. But the similar thing is, if you know the bear flag is going to get invalidated, or it's a valid bear flag, that's what you're going to do. You're going to look for the first break, then retest, or at least they couldn't even touch the trend line, right? And then you get your second sell, stop above. You don't need to put the stop here. You could just put the stop there. And then it's going to try to go back up because a lot of people bought above that bar, which I think is stupid, but whatever. So it tried to get back there and rescue those, and then it just came down. I mean, one can literally find micro flags and trade with them and still be able to stay profitable day after day. All right, so is Globex range, it's, let's see how wide the range is. It's just an average range. We are right now testing the key price level area is Asia mid and midnight open for US. Midnight open US is the green label. Asia mid is the Asia range, mid range. So what do we have here? Testing, so it's support. If the bears start to close below this key level, we will come down and test this Globex low, but there's possibility of making a double bottom there. If we start to close bull bars, moving average is going to be my target. Then I'm in to go long. I'm going to look for bull bars closing above the moving average, and I'm going to look to buy the pullbacks with good bull signals on the 15-minute chart. We're smack in the middle of it, so I would take caution here. Okay, so we have less than okay, we have 2 minutes and 4 seconds left for market to start, brand new week. Please take your time. You don't have to trade every bar. You don't have to rush your trades. Just wait. Sometimes it's better to take trades after 10:30 a.m. Eastern time. There's no rush, right? So just safeguard your accounts. Just safeguard your accounts. The last thing you want is to take bad trades back to back at the open and then spend the rest of the day trying to catch up and break even. You don't want to do that. So there we go. Market is open. We open within a trading range. It's a very tight trading range. Okay, with a bit of a bear channel, but it's kind of going sideways. So bear C, a double top bear flag. Here's a bear flag, but it failed to break out. Here's another one. It also failed. So either they sell now or we're going to reverse back up. So we are below the last week's midpoint. All right, we actually did move, but we are stuck in between on the hourly chart, 20-bar moving average and a 50-bar moving average. These are EMAs. So we are stuck in between, so therefore it's a sideways market. So it's a bet against market. It's probably some kind of a trading range. It's looking for a breakout either way, but the breakouts could be breakouts can fail in reverse. Let's see. On the ETA chart, bulls already see a second entry long. They want to test the 55.35 before they see the first sellers. So market could reach 55.35 area, maybe one tick below, could reach 55.35 area, maybe one tick below. See if they can actually make it right there. Bears want to break down and they want to bring market down to 55.25 area. So bulls need a bull close here. It's just too early to do anything. You're in a trading range here, okay? And you don't know what the first bar is going to do. You're smack in the middle of it. It might come down and test the low of yesterday as well. So we're stuck in between 35 and 25. It's a 10-point area. But we're closer to the 35, so we might need to go. If we're in the middle, I like to see a pullback. If it's bearish enough, I like to see a pullback and sell. But if it's closer down here, then I would like to see a pullback and buy. You're in the middle. It's just very difficult to construct any trade. If you're going to try to trade anything, here's what I would do. I would mark these levels, these wicks, okay? But it's a 1-point area I would look to buy. If I'm closer to the 65 low, so that is 28.50. From 28.50 to 29.50, I would have a buy order, and I would scalp, okay, maybe half the ATR, right? So maybe then here is another one, right there, okay? So look, there's a 1-point area. If I'm going to do anything and I am desperate, I really want to take a trade, maybe I need to go to a staff meeting, whatever, right? I gotta drive the kids to school, although they are already in school. Your kids would be late if you left now house. So anyway, so you got the point. I would buy and I would scalp, right? So closer to that. It's a limit order market. Oh, that's right. There's a 3-hour difference. All right, so there's a trade for you. Matthew, thank you. Oh, screws are closed. Oh my gosh. I need to stop with the, who am I to even talk about kids? I'm single and have no kids. I do have a cat, homeschooled cat. Maybe I should stop with the kids analogy. I have no business talking about kids here. I'm not even in the league, parents league. Anyway, I forget what I said, but you got the point. So that would be my 1 point area where I would look to buy and scalp. See how they just bought and scalped in that 1 point area with bar 1? That's why it's a doji, because there's no, everybody knows, I mean, machines know that it's difficult to structure a swing right away when you're stuck in this area. So best to take a quick profit and move on until the swing begins somehow. See, at that time, ATR was around 6. So that, right, so you put a buy order there, a bunch of buy orders, and you got fill there. That was 375. It was like 6 point something. So market gave you more than 3 points, which was half the ATR I said you could scalp. And they just did that. That was that buy area. Bulls want 2 consecutive bull bars and get above the last week's midpoint. Fake breakouts. Here is the trend line. Bears want to break the trend line, and bulls want to trap those bears. They could easily break those trend lines and come down, but the buyers are waiting in this area. That's pit stop. So if we do close a bear bar and break these 28.50, then 27.25 to 26.25 buyers waiting. But nothing broke with bar 1. So what do the bulls need to become more serious about buying? They will need a second bull bar closing on its high this time. It has to close much better than bar 1 to start the buying. So the targets will be 55.35 and higher. Slow start due to the triangle and tight trading range. You got two bull bars, really good close. So if you were to buy, how would you buy it? You will put a buy stop orders 1 tick above, and you'd be safe, right? So idea was to get to the 55.35 and higher, but there's a small gap there. Is anybody who put their buy stop order didn't triggered into the long trade, so therefore they are safe. So now they're disappointed because they couldn't get into the long, but now maybe they're like, okay, this bar is taking out the second entry long bars low. Maybe it's best that we didn't, so they might actually cancel and sell with this bar now. So, and that's the beauty of is entering with stop orders rather than limit orders or market buy to close market. It's better, right? Because you're in a limit order market, stop orders tend to get trap you into trades, but in this case, you didn't even enter. So the market is now trying to break this, and the bears are trying to come down to the 27.25 to 26.25 area. There are probably buyers waiting there, but the bears want to test the pit stop, which is 55.25 as early. We could actually come down and test and then bounce. But you see what just happened there? So it's a 1 point area. Immediately they hit buy orders, right? Why? Because it's a trading range. It's a limit order market. So you know there are some buyers waiting there. Some bears sold, taking profit, scalping. If we close below this level, then we're coming down to this level. Then from the 25.25 to 24.25 buyers waiting. So it continues to sell. It was a brief pullback because it's support. It's trying to come down and touch the bulls. Failed there. They gave up, canceled their buy stops, and reversed it back down. So we got a breakout, but will the breakout continue to come down to low of yesterday, the nearest magnet? We'll find out. But there is probably a bounce waiting here. Even if it comes down, I think bulls will try to fade those bear bars anyway, so we may not have too much space to downside. But on the higher time frame, we closed another bear bar below the key level. So now to continue further down, bears need another 15-minute bear bar for continuation sign. So they need to close this current 15-minute bar as bearish as possible in 14 minutes. And you can see that 1 point area and a little bit lower held. So any breakout, just like here, failed, also can fail to the downside. So I don't like to look for follow through unless they show me the follow through. If there is a triangle, or triangles are trading ranges anyway. So I always expect failed breakout and a reversal back into the apex of the triangle. Now, what do we need to keep selling into pit stop and further down into the low of yesterday? I need a follow through bear bar. So what I look for is a pullback to the breakout point. In this case, it's this trend line, and then close of a bear bar. Then I can look to sell underneath that bar. Otherwise, I'm not touching this because machines are betting against, and they're already trying to fade. So I need another bear bar. So you have to be careful and patient with triangles or any tight trading ranges. Always look for failed breakouts. Okay, always be on the lookout and failed breakouts. So here's the thing. If bar 3 didn't have that lower wick, okay, and it was a really strong bear close, that breakout could have continued coming down. Okay, we would have already a bear bar and then coming down with a couple of bars before reversing back up. But when you, at the triangle breakouts, when you get bars, strong closes, but very visible, okay, prominent lower wicks, that's going to make you stop in your tracks and question how strong this breakout is, right? So if you did sell the close of bar 3, you would have been stuck, right? You've been forced to sell again at the breakout point underneath 2 or 1 again to break even. So maybe best to wait. So what about bulls? Well, they already marked, just like I marked, these lows, and they had buy orders there, so they're making money. They're targeting back up to here again, this little gap that they want to close. There you go. So failed to test the pit stop. Buyers showed up a couple of ticks above. right? So actually 3 ticks above they showed up. And inside bar, now we're back to the triangle's upper range and trying to break out. So even if you mark your 1 point area right there, 20, remember I said you could come down to 25.25. We never tested that. So you would cancel those orders. You enter right here, 27.25 to 26.25. Even if it come down, it would fill and then go. It would just bounce and you would still make money. This one bounced right here. So I did say fading could begin even if this comes down. They're going to fade the bear bars. That started a lot earlier. So now we close this gap. Markets, where is it trying to go now? This area and 1 point, right? So 39, 38. They're going to take profit there. The next one is right there is the 1 point area, 40.75. So let's say there will be some profit taken here, or we're just going to keep buzzing through it into right there. But you see some profit taking. You see they just hit some sell orders there. So it's stalling. Stalling is either profit taking or it hit a block of orders that acting as a barrier. But if it's weak, then it's going to buzz through it, break through it, and it's going to get into this area. This is a lot stronger area. But you could see the stalling. So I did buy finally, and I took profit right there. But I'm looking for bulls to do a little bit better and bring me up here. But I have taken profit. I'm just looking for a little bit more follow through. Very nice. There's also measured move. That's your measured move. That's why I expected follow through. So I'm holding a runner, and that's it. So I'm taking profit here as well because it could come down a little bit. But a bar like this might want to go up here. That's the next level. So that's high. 45.75, 44.75. So the 1 point area. Just give myself a 1 point buffer. So we closed above it. So there will be profit taking here, but we may not. We could just, it's very big bar. It could continue. You can also have a measured move from here. So that means market could reach there. It'll take some profit here if it can get above the high of yesterday, because these levels are targets now. But it's just a tight trading range and a big breakout. It always is a problem, right? It's always want to try to snap back to it again. But it's a breakout bar, even though it's a small breakout, but it's a breakout. So just like me, every other machine is taking profit, but they're looking for follow through into this 1 point area. So here's a breakout point. We reached the measured move. That's 2R. That's half R for this breakout. So it's doable. But first we need to get above the high of yesterday. ETH, I do have an ETH chart. Let's take a look. But it is the pit stop. And you can see last time this pit stop was very strong. Came down. That's your sell right there. Second entry, even you can sell. Break of that, you can continue to sell, and then you take profit because it's going to bounce there. Bulls cannot get above this buffer, so they're not going to touch there. It's coming down gradually. There's a wedge formation. So is failure of a pit stop touch, that means there's some kind of a frenzy, early buying. If we break it, the problem here is, look what happened. We did not test, we did not get a break there. So if anybody automatically sold, any machine sold right there, they're now disappointed that this bar actually closed also above buffer. So we know anybody who sold here, again sold here, stuck twice, because we know market is trying to get there. So they're going to sell there, and we're going to get a bounce from there. So it's going to go there, and it's going to bounce from there, maybe into this area before finding buyers again. So you can literally, by looking at this, can tell where price is going. It could be one tick before, two tick before, but it's trying to reach there, 55.45. So your question is, if you see things on ETH, for example, the gap on ETH, what do you mean? You mean ETH? How much validity do you give when enter? I don't do that. That's insane. I would not recommend you. Are you talking about looking at a higher time frame and then RTH, smaller time frame, lower time frame on the RTH, or you're looking at a 5-minute ETH and a 5-minute RTH? Don't do that. That's just too tiring. You're going to get false signals. Stick to one chart, whatever you're trading. You can look at the higher time frame, 15-minute ETH versus RTH, right? Look, they're taking profit there. So here is take your trades on the RTH. Okay, this should give you directional. Look, key level, where is the follow through bear bar? Remember I said on the 15-minute, if we get another bear bar underneath this key level, then I'm going to target this, but we could get a double bottom, I said. But then look what happened. We never got that, and then market reversed back up. So what is your target? The top of the Globex range. So we could get a breakout. The first target, market I think is trying to reach the 55, 59.25. It's the bullish 1R or measured move of the Asia range, but we need a solid breakout from the Globex sign. So I'm looking for market to reach here at the minimum and see if we can get follow through. That's half R, that's measured move for this structural breakout. For this one, that's 2R. So we need to close above a high of yesterday. We overshot a little bit, but you could see sellers there. We just hit a sell order, and the bulls are taking profit. They demolished this one, so this could act as support now when we come down, but I'm not going to hold it there, so just to keep it clean. We need bull bar above high of yesterday to get follow through buying. We have a nice breakout, but overall we're in a trading range. So market is probably trying to reach this area, maybe even that area, which is closer to measured move target. I think market is trying to get to here. Excellent work. I need to switch brokers, so I have to change data connection. It's going to freeze the chart for a minute. But if you're long, but take profits along the way at these prior lower highs. Okay, this is where stops are, so the bears are going to defend. That was your 2R, and that's your half R from this structural breakout, but that's not measured move. So bulls want this. Okay. Yeah, it's vacuuming up because it's a trading range. So we may or may not touch, but I think this bar 31 lows we're going to try to touch. So it's trying to go up here. All right, so let me change the brokers here, and I will keep talking. Unfortunately, I have to relaunch the application. This connection requires a relaunch. Which is annoying, but nothing I can do about it. Application, this connection requires a relaunch. Which is annoying, but nothing I can do about it. Okay, let's start that one. Okay, launching the application. Bar 7 is taking somewhat profit here. The measured move is right around the sell zone. It's a very strong sell zone. It's also top of the trading range the market is trying to reach. Also Asia, 1 hour Asia range breakout for bulls. Just never works. Come on. Because I'm measuring this level right here and putting the stop right there. You can use this if you like, or use that if you like. I mean, I'm measuring from here. It's just conservative. You can also take that way. It doesn't matter. It's just giving me an idea that if I'm long, I'm going to be taking profit and holding more runners into that area. We're almost there. Here we go. I hope you guys took profit because I did. But it could still continue. There's a little bit more room to the upside on the Globex. Heck, there might be even more, but this is where I would take profit. Measured move is measured move. And we're testing this area. We came in though with such volatility, but this is really a leg in a trading range. Possibly this area is strong resistance. So I'm gonna get rid of these drawings. We don't really need them. The first sell probably is going to be challenged by the bulls, and they're gonna want to bring price back up again. So if you're looking to sell, you should be looking for a second sell. China's president is speaking, and he has been speaking. So I don't know if it has anything to do with this. Maybe. So mini machines are taking profit here. We might need to come down and test 55.51, 55.50 and look for buyers there, possibly, but we'll see. Anybody have taken any profit there at the measured moves? You should have. But if you haven't, don't feel shy. Just tell us how you handled this trade on Discord. A really good start for a Monday morning, I think, right? And this can put us into sideways here. We could go. We could come down a little bit and then sideways. We could come down, go sideways a little bit, and maybe even come down with another leg and then go right back up. It is possible that we could get that. The market will try to get back and retest this area one more time. Yeah, I mean, if you already made your money, Matt, you know, maybe it's just take a break. I mean, the idea of is becoming a day trader is not to sit there and trade all day long. The idea is to eliminate excessive work, right? So we're trying to replace our day jobs that could be 7 a.m. to 3 p.m., 8 a.m. to 4 p.m., 9 a.m. to 5 p.m., right? Or you could be a graveyard shift, worker. You could be a doctor. So why work? If you already made your money, the same amount that you used to work from your day job or even more, there's no need to work anymore. Just go, measure the grass, in the backyard. I don't know. Name your trees. Just find something productive to do, but don't trade anymore because you could easily give back what you just made. I had to replace the broker, so I did jump in with bar 7, and I took profit right there. So I had to exit out of the other trade with another broker, made my money, and then switch because I didn't want to miss this. And then I jumped in again with bar 7. Why don't you contact Richard? I think Richard would love that. Yeah, definitely. Here. Oh, there's a BTS, Richard. Oh, look at that. There's a faker. While I'm looking for BTC Richard, I found a BTS Richard. How about that? Let me zap that loser. Hold on, guys. Just waiting for this pullback to be over and the bulls to show up again. But I have no rush at this point. I've got an outside followed by an inside bar with bar 8 and 9. Bears tested the outside bars low, is immediately found buyers there at the low of bar 8. Is bulls trying to trap the bears there. So that means they need to close a bull bar here. If they fail, we might need to come down more. Bears trying to get a breakout from the bar 8 low, but they're already trapped. Look at the size of that lower wick with bar 10. But there's nothing here. So we're consolidating a little bit. And you're in a large trading range. So this is probably a leg in a trading range. We might need to go sideways a little bit. So here's what I think might happen is go a little bit and then try to sell one more time, maybe somewhere here, this area, and then maybe high of yesterday. And then I would look for small pullback bull trend, kind of move up. But this could last sideways and down and then reversal back up again. Or we're just going to reverse back up and make a double top. But I'm looking for a trading range here, small trading range. We're above high of yesterday, so you do have a breakout. You can also measure this trading range breakout, okay? And you can look for measured move target right there. Bulls want to demolish this area because they came in with such velocity strong. They're looking for a second leg up. That could bring us up here. Here is another. I count 1, 2, 3 bear bars there. I'm going to measure this right here. Like we could literally reach there, which happens to be the measured move for this. But other bulls see a much bigger structure, except that that's a wick. I don't like to measure wicks like that. You can even extend it like this, and your measured move would be furthermore up closer to the high of last week's range. So the market could continue, but this is too steep of an angle. So we might end up getting a parabolic wedge here. Here's another leg, pull back, another leg, and then it goes sideways. So we're bullish. I'm still looking for bulls to get us on the higher time frame. I do have a really good sell zone right there. Is visible. So we want to actually go and test 65.75, which is right around here. Might have measured it wrong, so I'm going to take that bar 19 low as well. And that would bring us to 66, so one tick below. There might be some sellers if we breach this level. Dallas Fed manufacturing is scheduled for 10:30 a.m., so it's less than 5 minutes. And I haven't bought anything. That's an inside bar, but you're kind of at the top of this trading range, so might need a second bear leg here. I bought nothing. And what is the other reason I didn't buy? So I mentioned something about bar 8 and 9. What is the reason I didn't buy there? Who's going to tell me based upon the idea of bar 8 and 9? Now look at the follow through bars, or the next couple of bars after bar 9. What do you see that failed to happen there for bulls to show me that they want to test the bar 8 high? What happened there? That I can tell that I shouldn't be buying one tick above 11 or the close or anything. No, bulls failed to close above the midpoint of bar 8 outside up bar, right? So bad, good breakout, okay breakout, good follow through. Pull back to the first gap bar 7. They found some buyers, but they can't close bull bars. So bears need a second leg down. If you measure bar 8 range, 50% is right there. So bar 11 did not close a bull body above the 50% of last strong bull bar. So we're stuck in it. So that means we're in a trading range. You need a second leg here. Okay. So there you go. They're trying to close below the buffer zone, 51 to 49. If they do that, they're going to keep pushing into 55.45. Looking for 55.45 or a couple of ticks above test. It's a great scalp there for me. I actually sold and I took profit a couple of ticks above 45. So that was 45.50 tested, and now it just came down and tested the pit stop. See, that was the second leg. So I sold into that second leg, and I can see exactly where the machines are taking the market. It's the pit stop, 55.45, and a couple of ticks above. I already scalp before it bounces. So I swing and I scalp, but if there's a magnet, which is a pit stop, machines know that it's a good manipulation area. So they're going to take profit because they know that market could bounce there. It's coming more than 4 points, 5 points above. Okay, but problem with these bounces at pit stops today, you're not going to get clean bounces. You're going to get overshoots because look at the ATR. ATR is very high today. It's 8 points. So it's going to overshoot. So where's it going? It's going to the next buffer, right? So here it is. Look, I took profit here. I didn't have to, but if I weren't talking, I would have probably held a runner into here because of ATR being so large, okay? But you always take scalp here, leave a runner. So now any machine thought that this would have bounced. What are they going to do? They're going to measure from that low to, they're going to measure from that low to the pit stop, and they're going to try to get in with a stop order right at the mid-level right there, and they're going to target back to break even. So they buy here, they take profit there. Why do you think this bar is stalling right there? Because they thought the market was going to do this right here. It's coming down, it's going to bounce. Instead, it overreached. So they immediately measure from that low to the pit stop. They put a buy order right there. They take profit here. They already broke even. This right here is making money. So they're back to making money again, those bulls who utilize these pit stops. Okay? So if I weren't talking, I would have done that as well and scalped out. My day would have been fantastic. And there's always ways to make money in the market. You just have to learn and be able to apply. Okay? So, and don't, shame anyone into, oh, you're a scalper. Yeah, I pay my own bills. I know Al also scalps when he sees a good setup, good reversal, second leg down. He knows he needs to take profit right at the breakout test or the moving averages. There's a possible bounce. Rose says that's a manipulation area anyway on S&P. Probably buyers waiting. When ATR is too large, it's an overshoot. Those bulls buy with average entry price. So, so many ways that we throw at you. It's your job to combine them, plug, unplug, find a way to enter the market and get what's yours, okay? So, because you pay your own bills, we're not in charge of your finances. You make the decision whether you should scalp or swing trade. You already had a nice swing here, but that was a leg in a trading range. So you have 2 legs down already to the mid-range. If you measure this trading range, we're already testing like 33% pullback, near 50% pullback. So you know there are also buyers there. So I would recommend you to Ed Meng, watch last week's, last Thursdays actually. Was it Thursday, guys? I did the pit stop thing. Was it Thursday or was it Wednesday? Yeah, I think it was Thursday. So I did an hour-long explanation. You can download that file, webinar file, and watch and learn about it because I can't go through it right now. It's a important concept for S&P and machines, how they see market. It's also L's 5-point scalp versus 10-point swing, initial swing levels. Not levels necessarily, but the concept of how S&P swings and what that point count is. So it would really help you if you watch that, and then bring your questions, and I'd be happy to help once you get that base. Okay, I'm not rejecting your questions. I just want you to learn about it first, and then I'm happy to answer your questions. Otherwise, it would take me, once I get into teaching mode, it's hard for me to get out of it. So, and I'm trading. So hopefully you guys did take profit here with bar 8, if not bar 9. You could have exited underneath bar 9. You get the second bear bar, both of them closing at their midpoints or lower. You're going to get a second leg. I wanted to see bulls get up there, but I did say we could get a second leg, we could go sideways, and then sell again perhaps, but before finding buyers. This might take a while. Eventually we will get up here. We did come in with such velocity, but the problem here is that the trading range highs, right? So we are going to get back up here. I still think that market wants to get up there. There could be a good swing for me from there. That's what I want. So it's really nice inside bar at the middle of a trading range. So I would like to see market get back up. But remember, if this is a bull flag, 1, 2, 3 wedge bull flag, or we might come down, make a double bottom, bull flags could fail, and then we could get a swing short. I don't know. It's difficult to sell against this. So better to sell up here. What do we need to see here in order to go in order to see bulls actually go test the 55.55? We need a bull close. So if this bar 14 closes bullish is right above 55.51, which is the upper buffer, right? Where do you think we're going to go? We're going to go right back up to the 55.55. But if we fail to close that bull bar, we could come back down again. So this is creating a trading range here. Bulls still trying to reach back up to the highs, this area. They're trying to get the next leg up. So their target is the prior high and higher. Get rid of this for a minute so it's cleaner. So because we're at the top of a trading range, this could fail. Bear's trying to sell, but I don't think I want to at this point. Some buyers above inside bar 13. They want to bring market back up to 11 high. Second leg high. And further up above. But some sellers right there waiting. So they're going to have to cut through it. They have to go and test the 54.50, 55. There might be some sellers there. Anybody who bought above 13 looking for a 1-point scalp, initial scalp, why? Well, S&P's trader profit is 1 point, but ATR is 7, half the ATR is 3.5. Take out 2 ticks, so you got a 3-point there. So market, anybody who bought 1 tick above entered 50.75, looking for a 3-point scalp minimum. And that right there is 3 point. So they're trying to reach there. It could go a little bit higher. That's only half the ATR. So we're probably going to tag 53.75. I didn't buy above 13, but it's valid buy. They're trying to get there, 3. That's their scalp. It could go even higher. I didn't buy above 13 due to outside bar. It's also high to can fail at the top of trading ranges. So it's not all that great of an entry. So anybody did buy, they got it scalped there, right? So that's a 125, 150, maybe even more, 175. But they're disappointed because they were going for half the ATR. So now ATR's changed to 650. So you could see that the conditions is quickly changed. But they're disappointed, so they will buy the pullback, and they will try to get back to the high of 13 again. This could get us sideways, like I said, and then have another leg before going back up. So be careful here. So leg 1, pull back, leg 2, pull back. We could get a leg 3 coming all the way down here, maybe even into this gap area, okay, before we found buyers later on today. There might be some buyers here. Disappointed bulls will try to buy and bring price back up. Bears want to take out the bar 12 low and get a break down. But there are some buyers here, maybe here a little bit lower. Bears, in the meantime, want this to be tested right there. but disappointed bulls above 13. It will try to buy and get a break even. Because it's sideways bars, small trading range, some bulls are buying. They want quick fix there. So this is their quick fix right here, but they want market to get to here. They need a bull close here. Other retailers will look for a bull close. So the machine's buying here. Retail bulls, they're looking for a bull close to buy one tick above. Could come down more. I mean, ATR is more than 5 points, so it's going to keep pushing is lower as much as it can to make that 1, 2, 3 wedge bottom. So that's the quick fix for bulls, and a break even up here. Still valid. You don't need to use ATR. You can simply measure the bars and get an average reading, like how big these bars are. You certainly don't need to use it, but this makes my life easy. I don't have time to measure every other bar or try to figure out by looking at the price axis how big the bar is. This tells me. I use these on each tick is status change, not the price on change or bar close. You need actual number. So it tells me right there, so I don't need to do anything extra. Bears trying to get here a third leg down. They also see this as a target, slightly lower than close of yesterday. But it could also come all the way down because it's a trading range. It's trying to get to the full 50% pullback. But disappointed bulls, they still want some kind of a fix. But is this good enough? I don't know. There's still 1 minute. If the bar closes bearish, they're going to be forced to buy lower. Yeah, that's disappointing for them, but it's expected to have that wedge bottom, and you get a failed breakout because it's trading range. So we're now back to this target right there. So good for the bears. They can actually vacuum it all the way down here. They could also have a expanding triangle. Okay. They could bring market all the way down to the low of yesterday. So this is still coming down. But we are now in the gap area. So in order for market to continue to come down, there's an apex of this expanding triangle. So we're right there. So it's kind of a support. If those bulls is disappointed, will buy here. It happens to be the 50% of this trading range. So it's a good place for bears to take profit. It's also 1, 2, 3 wedge bottom. It's a wedge bull flag. Bulls want to bring market back up to the bar 13, maybe even 14, but they need a bull close. So now bears are taking profit because this was their measured move target, okay? But they want to bring market down here. Moreover, I think that they're going to take profit here. So it gives the bulls another chance to scale in. They want market to get back up to high of yesterday, back to bar 13 close, or 13 high, or 14 low, but they're going to have to swing now. So we need a good bull close to say, now the bulls can buy, okay? Bears are taking profit right there at that target. Even if you sold late underneath 15, some bulls try to buy there, but I did say we might need that third leg down. Now, those bulls are buying into profit taking possibly. But in order for other bulls to enter, they need is a bull close here. So it's not all that great of a reversal yet. Bulls want to keep the gap open right here, and that means they have to start closing strong bull closes, bull bars. Failure to do that, market will continue to vacuum down. I'm afraid if we do that, we take out the last week's midpoint once again, that could bring us down to 2R and then further down to here, which I put in haphazardly. So here we go. Okay. Could be that, or like this. Smack in the middle. This is support. They're trying to move underneath the apex of the expanding triangle, and the bulls are trying to hold this area. So we have a trading range trading happening right now. Market is in a trading range mode. We could come down more, but I want to see how they're going to close this bar. It's a good place for bulls to buy and break even or scale in, but they need a bull close. So market got a big up and it's trying to get a big down. Instead, it got 3 legs down. So it's not really a big down. And we have a bull gap here. So bulls see this as still pull back halfway back into the trading range midpoint. And there could be buyers there and they see a bull flag. It's around time that we could get some kind of a small pullback bull trend start. If they can manage to do so, could go up with several legs. Because disappointed bulls, one tick above 13, didn't get a chance to break even. So they scaled in one more time. And they want market to get back up to the 15 high. Or wherever they entered, which is their break even, one tick above 13 high. Or average. Now you can measure once again. That's your fix-it target. 55.44. It is not a big down, but it's halfway down. So it kind of puts us into what just happened here? Are we sideways? Yes, that puts us into some kind of a trading range. But bulls still are having the upper hand with this gap open. So they want to get back up to here again. This is also some kind of a rounded bottom and pullback. So you got a cup and handle situation here. Okay, but that doesn't mean that the market cannot sell. What could happen, remember I said we could go sideways, up a little bit, and then right when everybody else gets their break even, market could sell. So that could create a bear flag as well. So bulls are in fix-it mode, and they still need to get to 44 to get average exit, average price to break even, but not necessarily make money. Here we go. They just tested the 55.44. Good for the bulls. Now the race is on to get back up to either the close of 13 or one tick above 13. Excellent. So this is where I bought, finally. And the last third leg down, where's my target? If I go with L's wedges, it's the third leg starting point right there. So here is pullback. Here's another pullback. Or you can find your projected target. Market can push either to here is 55.11, 55.51, or further up. So let's see if we can get to 55.11 or I need better glasses. I need to go see my doctor, eye doctor. Sorry, I make things larger because I'm having a hard time lately. So it's 51.25. But there's also a bear gap here. We're in a trading range, so the market is trying to close this trading range. I'm sorry, this gap. So that means we need to go and test one tick underneath bar 14. So it's pretty good job. I mean, for bulls entering, scaling in the right place, because they kind of timed it well enough that bears got a nice measured move target there. Is 3 legs down. Great place to enter. They got an average break even with one contract. Now they're making with the other one. So now race is on for 51.25 or one tick above or the high of 13. So I'm making good money here, and I'm going to try to hold this. So excellent work. I want to see bulls do better here. At least get to the 51.25 maybe. But if they get to 51.25, they close a bull bar there, they're going to target the prior high. They're going to target this this trend line. If we start to close above that trend line, we're going to go higher. We literally tested the high of 13. Actually, no, one tick below. So there's still room here. I would still hold. Bulls did close that gap, by the way. So now they want to buy more, and but we need this gap stay open. So if the bulls do show up here, we're going to go test the 9 high, and then it is possible that the market could get to 55, 65, 55, 64 area above, but we need follow through here, and we need to get above not just the bar 15 high, but also bar 12 high. So I like to see bulls close above, stay above high of yesterday, and close above 51.25. But some bulls taking profit because it's close enough to the third leg starting point, and it's also a good break even for many of the bulls. So if we can get those weak bulls out of the market, strong bulls who are holding want the prior highs, close above this trend line to get a breakout and go even further. Now, that would be on the higher time frame, that red area we could go and test. So 64 to 65, possibly 66 test before coming back down again. So what I have done, I've scalped here. I guess you could call me a weak bull, but I'm actually strong because I'm holding a runner. So pretending to be in the big league here by holding a runner. So if the bulls start to close above 51.25, I'm going to be adding more contracts. Just to rub elbows with the strong bulls, but I want confirmation because I'm a retail trader. So 51.25, love to see a breakout above that. But am I going to be lucky? That's terrible, bar 19, but still it's probably a follow through. But I don't like the way it opened and closed. So I need a bull bar here. I need bulls to get above bar 19 high. Get a follow through here. Get a second leg up. and possibly get a third leg up. My target is still around 64 to 66 area above. Obviously the prior highs first. But this, we did close this gap. Although, no, we did not close the gap. I apologize. Bar 18 did not close the gap. That gap is still open, slightly open. So you see why I scalped there. I thought that it was closed. I took profit because we came very close to the high, one tick above 13. So I took profit there, but I'm holding a runner thinking this gap is closed. Some will say that we closed the gaps, but I disagree with that. So now the reason why we're going sideways like this and not getting a quick bull bar, that's because notice that body did not overlap. So slightly bearish trying to keep this gap still open. But that means they have to close a really strong bear bar here, taking out the 19 low. So this is why I reduced. I cannot say this is why I reduced because I thought the gap was closed. I only reduced the risk because first I wanted to pay myself. This was a good run. This can still come down, and then we tested the high, so that's break even. But now I'm thinking I'm glad I did reduce the risk because I don't know if we can actually go higher here. But let's just wait. This is still a pullback. As long as we don't close a bear body below 19, bulls can buy again. So I'm holding my runner. I'm still long. I'd like to add, but it's just I'm not going to add anything, obviously. Now that I see that gap is not necessarily closed, so now bulls need to close a bull bar for me to even consider adding anything. So now bulls need to close a bull bar for me to even consider adding anything. Bulls want a second leg up. Might come down further before finding buyers. So I prefer to stay with one contract only and not add to it. What about the flags failing? Flags can fail at the high of trading ranges. So this is a one big flag though. So it's got still room to upside. So the bears still want to bring market down to here. It could happen, but they need to close this gap. And in trading ranges, gaps close. So if we do close it, then I will exit out and I will probably sell back down to here. But there's a gap here, there's a gap here, and so we're still above the Globex high. We haven't closed a 15-minute bar inside the range yet. So the Globex high could be support still. You're smack in the middle of a trading range on the hourly. Not a good place to do anything if you're not long. Of a trading range on the hourly. Not a good place to do anything if you're not long. So I want bulls to come in and finish this job. 51.25 is still my target. If we close a bull bar above it, then I'll look to see, I'll add another contract if we close a bull bar above it. Okay, so, but if we fail to tag the 51.25, that's a problem for bulls, obviously. We tag it and not able to close above it. That's a threshold. We may or may not become bullish, but if we close above it, we're going to test the prior high, this projected target line, this trend line blue, and then we could actually go right back in here. So you got a 6-bar trading range. Measured move for that is here, market could reach there. Okay, but we need bull bars, so it's really not all that great for bulls right now. More time has passed. I'm still bullish. Bulls trying to close this gap. Okay, so they're trying to buy here with the stop literally below, maybe somewhere down here. They're looking for a target up there. So I'm still long. I'm trying to be transparent as much as possible where I am with my trade. It's a trading range, but it's not all that confusing. You know, it's not big up, big down, confusing, but it is a down, except that it's still looking like a flag. And it's also cup and handle, but it's a terrible one, but it is a cup and handle. So the bulls are targeting this area still. But without getting above 51.25, 51 and a quarter, I think the bulls, more time passes, bulls will lose traction. Bulls want a second leg here, so that's why I think the 51 and a quarter is still a doable target. But it'll only get more bullish if we close above it. Market is setting up to be a lot more bullish, sideways and up mode, but it just needs more bull bar, bull closes. Without that, I'm not very excited about it. So we're on the upper third of this large trading range. It's also still a sell zone. Bears are trying to trap the bulls and sell. Bulls got a second entry long above bar 20, but too small bear bars. So they're struggling, but still okay to expect 51 and a quarter test. Expect 51 and a quarter test. All right, let me put a little diamond there because I earned that little diamond. So now, can we close above it or are we done with this? We close a bull bar above it. I think the bulls will try to push higher, at least to 55, 55. But I want more at this point from bulls. Get us to 55, 55, close above it, continue to go up to 55, 65 or 66. But we didn't, bar 21 did not close above, but it did test. So I was in my own way right to say that, okay, expect bulls to get that second leg there and test it. So it's only fair. But now, are we going to be able to close above and continue to go higher? These bulls both down here reached the 13 high, so they're actually made money, break even, okay? If they want more, they're going to have to close above 51.25, and they didn't. So that's bad for them because many are already taking their break even and exiting out of the market, okay? But so I'm going to wait. But you can exit, certainly. You can, if you're worried and you don't want to wait for this bar to close, then exit. But if the bar closes bullish, then there's no blaming me for saying exit. But I'm disappointed they couldn't close above 51.25. So, but we could still get that. It's still not all that excitingly, telling me to sell here. I'm not interested. I'm still holding this. I'm looking for prior high test, and I'm looking for a new high today. I don't know if I'm going to get it, but we'll see. At least a test of 11 high, which is around 55, 55. My stop is a break even now. I don't care if this position comes down and hits it's break even plus. So I'm already making money here, but it's just that I want to see follow through. But even though this is not big up, big down, it still puts us in a trading range. But this right here puts us in a small pullback bull trend possibly. So if you measure from here, bulls want that target. So do I. 55, 55, and a couple of ticks above. Since ATR is slightly above 5 or 5, it might actually hit 55, 55 and 2/4. Yeah. So this is the second attempt to get above 51 1/4. I will be a lot more confident that we are going to go test the prior highs. You can definitely have it under 18 because that's a breakout bar and a gap. That's where I would put it. If you don't want to use 17, but failure to, this is the second time bulls trying, failure to get above 51.25. I would be tightening my stop underneath 20, yes. So bulls closed the gap finally, so they have no interest in bears here, but they did close the gap, so this is good. They just need to now, what is the but? But is they need to close a bull bar above 51 1/4. And not only that, they have to also go test the 55, 55, and they have to close above 55, 55 and continue into the prior high. So there's a but, and so for example, let's talk about this a little bit. What can go wrong here that the bears can sell? So this is what we're having right now. There was a little gap here. We closed it. This is the gap that they did not close, and they sold back. But we closed it. So we should go up here. At least try, right? So that was leg 1, leg 2, leg 3. They couldn't close this gap. Do you see that? They couldn't close it. We have closed it. There's no gap here anymore. So that's why I expect a prior high test. And now we have a bull close. Okay, so now I want more. At least give me that target, which is 1R or measured move, but within this area. But you see, this happened, it's because bulls could not close this bear gap, so it sold. So our situation is more bullish than bearish, but I sure am open to anything here, but it's leg 1, pull back leg 2. I like to see leg 3. Here is the test of the high, and then market comes down. Furthermore, then creates a wedge bottom and then swings again. So that's a trap right there. They test the high, but they trap the bulls, and then it comes down. So we could get that. So that's why I think we're going to test this area. I don't think we're going to trap. If we don't trap, we're going to get a breakout. What about we go sideways and up and fail, right? So we're up, we close the gap. Look, 3 legs down, leg 1, pull back, leg 2. That's a bit of a weird counting, but it is there. That's the leg 2, pull back, leg 3. So they did close that gap, but they can't seem to go further up. They come back to the moving average. They found buyers again, another failed flag at the high of a trading range. Then it sells. But again, these lows, they fade, and then bulls show up again. So we're in a trading range now. Even though it's not big up, huge down, it's halfway down, it still puts us in a trading range. It just weakens the bulls. I don't want to see a bear close here. Can market do this all day? Yeah, we can actually next couple of hours do these deep pullbacks, but look, every time bears pull back, either second legs are failing at the moving average or big bear bars are being faded, right? They're buying. So it's in a way, not all that great quality of a small pullback bull trend, but it is a pullback and bull trend. Testing the highs, but then it fails and then comes back down. At the end of the day, they buy it anyway. So market makes higher low trend reversals all day long. Around the EMA becomes the fair price, but buyers are always waiting. What about the bears? Can they vacuum it down? They might. I think it's gonna hit my stop. So that's one of those big bear bars. Let's see if the bulls can fade this right here and then get back up again. Big bar though, it's outside down bar, bar 23. Once follow through, at least a touch of a moving average. Bears want 10 point out of this, or at least 9 point. But if they get their 9 point scalp, it's going to be a problem for bulls to bring it back up again. So those bulls will try to trap these bears right here before bringing price down to the 55.43.5, which is 9 point. 55.42.5 is a 10 point swing reward. So they're trying to bring market down to 43.50 at the minimum. If bulls can trap them right here, then they will have their chance to bring price back up again. But if they fail, we can, yeah, that's it. So I'm out of the trade. I got kicked out because I tightened my stop. Remember I said I will move it underneath 20. I didn't like the way the bar 23 was. So I moved the stop up even further. That's okay. I can always enter back in the trade with a good setup. Right now, bears trying to get a 9 point here, which is 55.43.50, but it's not for sure. So the only reason why I would have sold here, it's because of an outside down bar looking for follow through. So 43.50 to 42.50 is where bears want to test, and they might get it. But I'm staying flat. Bulls trying to prevent that 9 point because they would lose a lot of strength here, a lot of power to bring market back up to here with that not so looking good small pullback bull trend. But I said it is a pullback and bull trend. So they have to literally trap these bears right here, right now, and prevent that reward taking at 43.50. So that means they're going to have to fade this bar 23. So that right there, they're fading, which I showed you an example why they would do that. And if you want me to pull that chart again. Now, how would we have stayed sideways and down if this were to happen, right? Big up, big down, and we make a new low, even though not with a bar, but with a wick. That puts us into a bear flag mode, right? So market stays sideways and down. They sell the pullbacks above the moving average. But I kept telling you guys, this isn't all that bearish, and market is going to try to fade anything bearish instead of selling. So what happened here? Bulls actually prevented a catastrophic turn here, turn of events, which is bar 23, selling and looking for a 9-10 point mark test, which was 43.50 to 42.50. So bulls did buy because they saw a second entry long with 21 and they got stuck above it. So they bought the pullback and in the meantime prevented bears from gaining power. But bulls are not out of the woods. They still need to get above 51.25. Last time they failed. This is the second time they're trying now, officially. This time they fail, bears can take over. Any bear is sold underneath bar 23. Disappointed because they see a bunch of bars sideways. This is a limit order market. They're selling a good close. So they're trying to get a break even, okay? They want market to come down and test either the close of 23 or one tick under. So they sold, they faded a good strong bull close. So it's a limit order scalp mode here, no breakout. It's a small pullback bull trend in a way. So we could have this, make new high, sideways, and then we could sell perhaps. So market is still in this bullish grind up still, but it's just messed up here because that 51.25, they can't seem to get above it. Bears trying to get to the close of 23 or one tick underneath 23. It's also spike, pullback, and channel. Here for bulls is so channel like that, right? And if those bears exit out, we're going to go right back up here again. If they can be satisfied and minimize their losses and exit out rather than bringing price down to the 23 low, then bulls got a chance here. Otherwise, it could also come down if bears close a strong bear bar, taking out the close and the low of 23. If bears close a strong bear bar, taking out the close and the low of 23. So I'm flat at the moment, and I'm going to wait and see what the decision here. Flat at the moment, and I'm going to wait and see what the decision here. Because it's slightly more bullish. If I would do anything, I would have either stayed flat or I would look to buy. Yeah, the second try to get above 51.25 seems like failing, but we don't know that yet. So this can still get a breakout here. And then pull back the moving average and look for buy signal bars once again. The target is the prior high, like I said, and further above before we trap anybody. So I'm not interested in selling. I just bought again, by the way, because I really like that inside bar 25, but let's see if we can go a little bit higher. If not, I'm gonna say, okay, I'm wrong. They have tried several times and they have exhausted their options, and the market will come down. So you see 51.25 is really struggling. Is a good price, and market is struggling around it. Bulls are not able to get above. So if the bears want another leg here, then that's fine. It's a small, tight trading range. It's kind of a flag. I want to see bull bar closing above 51.25 and continue to go up on the higher time frame to go reach 55, 65, 55, 66 area. Actually 55, 65 and a quarter. That right there. It is the small pullback bull trend. I have stretched the chart. It doesn't look like it, but it is. Or it's trying to be one. So I just need prior highs to be taken out, 23 high to be taken out, and then pull back again and then buy again. If it fails, sometimes it starts like small pullback bull trend. You see all the signs adding up, and then suddenly it starts to fail. Well, then that's fine. Then I would look for these gaps to be closed and market to move down further. I can switch gears when that happens, but I'm not switching anything here. Either I'm flat or long, but I'm not short. And if you do go short, you only scalp, because think of this as a bullish channel. What happens in the bullish channels? Okay, bull channels. Okay, bear scalp, bull swing. Bear scalp, right? Bulls can get breakouts. So bears are scalping and exiting out, and the bulls are trying to maintain the swing, although it's the worst, but it's still, the concept is more bullish than bearish here. Plus, we're above moving average. 5-minute 20-bar moving average is above 1 hour EMA, so that's bullish. You got a really nice buy signal bar, 24. So that's probably going to get follow through. It's spiking channel, so the bulls want follow through until they can't. Just trying to be patient and not panic. No need to panic. Just wait. Give bulls a chance. But this is the second time they're trying to break above 51.25. They got a target right up here. We just need to get that. But if we fail, then fine. You know, what do we need? We need a second sell here. First sell is 23. We need a good bear signal bar, right? So we don't have that yet. I'm going to open up the question box and go to webinar. There's nobody scheduled after me. Just give me a second. So let me open this question box. Where it is limit order? Yes. So you're right, Warren. So this is still limit order market, right? Which we talked about, but bear scalping. Even bulls might be scalping, but bulls started the buy with 17 and they see a spot and channel up, except you're stuck in a trading range. And this 51.25 is still holding. So we did say that this is a limit order market here. Bulls had a hard time. There's half a minute left. Either they do it like now or never, close above that 51.25, but we get a bear close here. That'll be the second entry short for bears. Kind of 3 inside bars failing, and the bears trying to close a bear bar. Okay, so they did close a bear bar, but it is let me see, I think it's an identical size as the prior bull bar 26. So technically it's an outside down bar. So some bears are selling the close of this bar or one tick underneath bar 27, but you're so close to the moving average. I'm not really interested in selling because it's kind of a small pullback bull trend. So bears need a second follow through bear bar to bring it down to the 24 low or further down and close this gap. So they need to close the 28. So they see an outside down bar. Technically, that's what the bar 27 is. And they see that they can actually sell the close of that bar. If they get the second bar close bearish, then they're going to try to get the 24 low. Depending on the swings in a trading range, if the pullbacks are wide, then you have two-sided trading might be happening, right? So you can still enter with stop orders, but look where you are. You're in a very tight channel here, and it's a one bar alternating. So it's difficult to do anything with stop orders here. Bulls who bought down here, they saw a wedge bottom, right? And they're trying to get above the 51.25 so they can go and test this high and that high. But they're struggling here. This seems to be still very difficult area to close above, but they can easily do so. So I see a bear bar here, then I'm going to expect bears to bring market down where they were trying to go to originally, which was 43.50. And they might be already, they closed the bar 28 bearish, many bulls will exit. But to me, it's still not ideal to sell. Now they sold a close of 27, sell stop orders underneath 27 if they also entered. So they're looking for at least a 1 point from this move, or half the ATR 2 points. So it has to move 9 ticks from under 27, okay, to give them 2 points. That would be 8 ticks plus 1. They got 1 point. It needed to test 47, which it did. So they entered 48.25. It needs to go to 46.25 to give them 2 points, and 46, even 44. I'm sorry, yeah, 46. So it would be 2 point and extra tick. So bear is looking for 46 test. But that's 1 point scalp only. It's very difficult, right? So I'm not interested in selling. Not interested in selling. It's middle of nowhere. I'm gonna get rid of this. If we get the 3 bars, then yes, sideways and down, bears can get follow through. Anyone sold is still holding. So looks like, okay, so they're getting their 2 point, almost. Well, 40, it has to hit 46. That would be 9 ticks. That's 46.25. This needs to hit 46. But still not all that bearish. There could be buyers right here. Even if we come down towards 43.50, 42.50, there could be buyers there as well and bounce the market. So there was a 2 point scalp there for anyone sold underneath 27. They have tagged the 46, even 40, yep, 46 exactly, and that was a 9 tick. So they took profit there. But will this bar close as a third bear bar? If it does, it's going to go, it could come down more into what I said, 43.50 to 42.50 area. Bears see some small head and shoulders pattern with the neckline, so they're trying to break the neckline and pull back and sell further down. They want to close this gap so they can test these lows and maybe even come all the way down and give us a trading range day. Much more prominent trading range, but buyers would be down here wanting to buy once again. So it's not really all that clear for bears. Okay, so this was a 2-point plus 1 tick scalp here only. And I did say probably buyers here. They're going to try to prevent. If we don't get that bear bar, then the bulls will take over here, right? So it's still bullish. There's a spike pullback channel. You're testing the channel lows, right? So if I need a trend line, that will be my trend line. Maybe we would come down and test it. I don't know. But if it closes bullish, bulls will try to take over here. Because technically we're testing the trend line lows. How does the small head and shoulders would get invalidated? We need to start closing bull bars above 19 high. Well, we already did, so that's a pullback. Anybody who sold underneath 23, they got to break even. But in order for this to continue down, they needed to close that bar bearish. Nothing closed below bearish, nor at the close of bar 23. So this bar closes bullish, we're gonna start to go up again. So it's a small flag inside a bigger flag. So here's another thing. You got a strong leg down coming down like this, and then you got this. We take out this high, bulls are going to get a lot more confident there. So watch out. So the bulls, so market hasn't really decided, but we start to take out this right here, this high with bull bars. Okay, more bulls will start to buy, but we haven't done that yet. So bears can also sell this. So I'm still not seeing clarity here. It's more bullish than bearish, but it's also not all that great. So it's just sideways market. More bullish because bulls close this gap right here. They want to test the prior highs. They got a gap here. They seem to holding the Globex high. Bears need to close below the Globex high, bring market back inside the range, and come down and test this moving average. So without doing that, bulls will continue this terrible small pullback bull trend that I talked about earlier, still able to pull back, buy every single pullback and make new highs. So now my next target is 52.50. We get bull closes above that, we're going to keep going higher. Okay. Can bears start a small pullback bear trend? Well, now is the time to break that trend line and get this. Okay, so we have this bar, which is a gap bar. You see how they close that gap right there? And then small pullback bear trend started, which made a new low, and then market reversed back. Sure, I'll sell that, but I need to see this gap close, and I need to see a bunch of bear bars. Okay, and I also would like to see this trend line break. Otherwise, bulls are still targeting 52.50 and further up. So what did I say? If market comes down to the moving average, what am I going to look for? I'm going to look for a good buy signal bar in the form of a good pin bar or some good body. Well, 29 is not all that stellar buy signal bar, but it is okay. Now it needs one more bull bar. So if bar 30 closes bullish, then bulls will get above 52.50. But it's not the best. But it is, as is, a good signal. and it's swing. So you see this? This is kind of a higher low, lower low. This one's higher. Now we have higher. We're squeezing the bears out of the market. So this is target and furthermore up. I'm pretty sure no one's scheduled after me, but let me check just to make sure. One question is, can you explain outside bars? I know it depends on the context. When is outside bar considered important? L2, high 2, outside bar is important. Depending on how they close, right? Especially is outside bars, say, market went up like this and you get a really nice bull bar, right? And you're looking for follow through. Then it goes up, right? Everybody else still buying. Then it comes down and closes a bar, bare body, taking out the open, bull open bar, right? And then closes like this. That is an outside down bar. It doesn't need to be one tick under. It could be exactly identical. That would make it an outside down bar. The way that the body closed, lower than the open of the prior bull bar that closed on its high, many will sell that, even sell quickly pull back, but they will look for follow through selling. So they're like engulfing bars. They need to engulf. But if engulfing is like this, like for example, again, same thing, you got a good bull bar, right? And goes up, that's great. And then comes down, does this, and does this. I would not have sold this. I would never sell this because it could end up becoming, next bar could close bullish. I would buy above it with the stop here and I would look for that high to be tested. I would take profit there and then leave a runner. So depending on how the bar closes will give you strength. That's what I would look for. Bulls want to test 54.50 and higher. Bears still see it. I don't know what bears see here. I guess they want to break this trend line, but they need to start moving underneath the moving average if they want to turn market always in short, and they have to do it now. Okay, so bulls definitely need to get above 52.50 if they want higher prices. But if they fail, bears see double top neckline, they want to take out the bar 24 low. And in that capacity, they want to break the trend line, they want to close the gap. Then that means they can easily start that small pullback bear trend. So which one is it? We don't know. It's in the middle of it. It's slightly more bullish than bearish. So I need to see bears show me that before I even consider selling. Otherwise, nothing to sell. What do you mean? SS and Pick City? Are you guys on the webinar or in the webinar? I don't know. My ins and ons. I'm tired. So are you guys currently in the trade room, live trade room? SS and Pick City? Okay, Pick City says yes. I know SS was still trying to get in. Said, I know you had a conversation with Ken and I thought you paid for the membership, but so I'm not sure what you're asking, but let me see. We get the slides you're referring to or a video related to it. What do you mean? What slides? It's a very cryptic question. But it's probably a valid question. I'm just not comprehending, so we'll find out. Oh, yeah. Okay, so you are in. So which slides that you're talking about? You mean the slides that I was just showing with Encyclopedia, that the orange, it's It's got orange frames. Okay, those are called encyclopedia. Okay, so do you have access to Brooks Price Action Trading course, the video course? Because you can get access to those with a small fee, lifetime access. But you have to have 60 days minimum access to the course first. So figure out how many days you've been accessing the video course, then go to here. Okay, so this is encyclopedia. This is part of your online course. It's right there. If you don't have access to it, then go to members area and then go to Brooks Encyclopedia of Chart Patterns sign up page. Okay, this is where you're going to pay Richard, okay, $199 to get access. Okay, so that's how you're going to get that. I would recommend you to get it if you have more than 60 days of course access. It's a course on its own. You're going to learn tons of setups that repeats. So if trend line breaks, then bears will get their chance to close that gap. That could create that small pullback bear trend, could bring market down to here perhaps, but the buyers will be waiting at the low of the trading range. Bulls got every chance, and they kind of failed. So I had to do some buying and breaking even with these two bull bars because I was long. Remember, I bought, and this happened. So I bought the pullback at the trend line, and then one above bar 29, and then got my break even and exited. So I'm flat right now, and market might be coming down to test the pit stop here, which is 55.45. They're breaking the trend line. They can easily bring market down to 10 point, where they were trying to go. Remember, it's 43.50. Could test 43.50, maybe even 42.50, but it's also the first time the trend line is being broken. So we need a bear close here for market to come down and try to test the 17 high and then try to close this gap. So bears still not owning the market. They still need to close a bear body here. Then they could accelerate selling into 43.50 or 42.50. They can even move further down, like 40.50 they could test. They need a bear close to be able to bring market down. Testing the trend line does not work or help. It just needs to close below a bear body. So not all that bearish still. It's still small pullback. I don't even know if this is a small pullback bull trend at this point. It's some kind of a sideways and up, which I said we're going to try to go sideways and up as much as possible, but it's just not all that great for bulls. So that trend line is still holding. I like to see bears try at this point. I'm still flat. I'm looking to see if I can sell, but I'm not really excited about it. I want confirmation that the bear's taking over, because bulls can buy these pullbacks, and pullbacks can be two bear bars, one or two bear bars, and they can fade those bear closes like here, 31, 32. It'd be better if the bears can actually bring market down to 43.50 or 42.50 and then bounce, and then sell that bounce again. That would create that small pullback bear trend. Bears trying to have an attempt to close the gap here. So in that capacity, they want reward here. Their 9-point reward is 43.50. Is 10-point swing reward is 52.50. This gap is still holding. It's still strong. We do have a break, but how will this bar close? So it's only logical for bears to try to test 43.50 at the minimum. But it's just moving so slow. I like to see 17 low test at this point and the bears to take over, because bulls have tried several times and failed, and they could not get up to the 52.50. So you have several different reverse inverse cups here. You see that? I like to see bears do better, but problem here is that the 5-minute EMA is still above the 1-hour EMA. So market is still bullish, but I think the bears earned the fact that they should get some kind of a reward here. But it's difficult to sell 3 bear bars, though. That's great. So it could be sideways and down for the bears. So I still expect them to at least try to bring market down to 43.50. What about bulls? Can they actually block bears for the second time, reaching their goal? Well, they're still certainly trying, but 3 bear bars, possibly sideways and second leg down. So not really interested in buying here anymore. I want to give bears a chance to get to the 43.50 at the minimum, maybe even test 42.50. And yeah, so I think that's what they want, but we'll see. Bears need to close the gap. I don't see anything yet. It's kind of 3 legs down, leg 1, leg 2, leg 3. So what the bulls see here is a bull flat, okay, which is a bull flag. In the channel is flat, and they see double bottom with bar 24 low. So they're looking for a bull flag here. So that's how they could reverse the first break of the channel. I'm sorry, the trend line, and bring back to 52.50. I'm kind of disappointed the bears are getting stuck here one more time. And if that's the case for them, then that's it. So they can't, there's nothing to do here for bears. And this bar is not an outside up bar, but it is as is. It's big. It opened right at the close of 33, and it's trying to become engulfing bar, and it's kind of engulfing all of this. So if it closes higher, more bulls will come in now. Bulls see this as a bull flag, and they want to get back to the 52.50. So they're trapping the bears underneath the moving average. So, but you gotta wait for a bar to close. Many bulls who bought with the second entry above 29 bought again, maybe breakout failure of this trend line and getting a break even, so they want the 52.50. So now bulls need to show me that they want this to break out and go test the 55.55 again, and then get a breakout from there and get to 55.65. Bears losing chance again here. I mean, they had the 3 bear bars, which is great for them, but now this does not look good for them. So the bulls are taking over, and this is why I've been saying this isn't bearish enough. Small trading range. Strong bull close. Bulls want 52.50 still. But it's a trading range. So anytime bulls buy 1 or 2, 3 bars, bears are fading. Bulls are fading bear bars, but this has the potential of going up to the 52.50. Bears can still get that second leg. Remember, I talked about this could go sideways, and suddenly we could get that bear leg. So I'm going to trade this as a trading range, not as bullish swing at this point, because those bears can still sell. They're disappointed, and I'm skeptical here, because if the bears start to show up here, I'm not all that excited about bulls. We need another bull bar before I can jump in and buy. So this is pretty neutral here, and bears still want to trap. Bulls try to trap, which kind of did, but that could be just a buy into the trend line, first break, trap, and then break even. Okay, so now we get a bear bar. Those bears can sell. So it's limit order market, okay, and bears are not getting all that good traction here. Now this could be still sideways and another leg down for bears. Sometimes sideways is way too strong. So that's bar 32, 34. 3 bear bars. I always look for sideways and down until that down doesn't work, and then the bears exit out of the market. Then I look to buy. So this is your sideways. If the bears do close a bear bar, they could sell and take out the 33 low. They were so very close to their swing target, which was 43.50. Okay, minimum 9 points. And they're disappointed, so they're in a trading range, tight trading range. They're selling, betting against the strong bear bar, selling the close of that. But what they need a strong bear close here. It's difficult. And I am going to end the session and grab some lunch, and then come back and see if I can trade more. If we get a follow-through bull bar here, then expect 52.50 to be broken and the market to get back to the prior highs once again. So this trend line will be target once again. Okay, you're in some kind of a wedge here, and the bulls can break out from the highs if bears cannot get a bear close here. So it's kind of 50-50. But the moment we close a bull bar, then the bears will lose their chance. So, all right, so I am done with my session. I will see you guys later on Discord after a quick lunch. Bulls can still go back to that target I talked about, which is 50. Where is that? So they're trying to get a breakout into 55.60 to 55.65 above. Only if they get a bull bar close here. If they fail, then the bears will take over. Market did close 2 bear bars below the moving average. They did also here, but bulls quickly faded. Now they did again, but if this is sideways and down, I want to see more bear bars. But this time I want those bear bars to gap in below the moving average. Otherwise, it's difficult. I can only scalp, but here maybe some kind of swing setting up for bears, but I need more bear bars moving underneath this moving average. And forget the moving average. I'm more interested in is here. Let me get rid of this. Bear bars gapping down. So this is 3 bear bars sideways, 34.35. Second leg 35. Let's see if the 36 can go below 35. They can tip the balance scale right here, bears, but they have to give us that bear pressure, and that's moving under the moving average with bear gap bodies. Without that, they're going to be stuck or exiting out of the market. And the bulls can take over. So it's difficult here. It's lunchtime. It's not easy to trade. You have a scalp opportunity, not swing, but is swing up or down is might be setting up. You'll know that the bulls can go up here if they start to close above 52.50, and then you'll know if the bears start to close bear bars, we're going to come down, possibly test the 17 low. So it's really struggling here. We did close a 15-minute bar inside the range. Hold on, let me check something. No, it is, yeah. So, but we need consecutive bear bodies, right? So we only have one bear body. So if this 15-minute bar in 2 minutes and 36 seconds close on its low or below the Globex high, then we're going to come down and possibly test the 55.42.50. And that is 10 points for bears, believe it or not. So I think the bears can still get that 43.50 to 42.50 area tested if they step up here or step down. I cracked the joke there. Anyway, so yeah, my blood sugar is running low here. I need to go get some lunch because I didn't have any breakfast. It's really boring price action at the moment, so you should do the same. But if you are in a trade, if the bears start to close bear bars here, you know where they're trying to go. They're trying to get to the 43.50 to 42.50 area down below. And they might be able to actually start at some kind of a swing, but bulls are waiting down here, okay? So even if we come down, I think those bulls will show up and bring market back up again. So that could be towards the end of the day. That could be around, when I say end of the day, like late afternoon, not late afternoon, maybe like 1:30 p.m. Eastern time. Like this could come down and then suddenly we could start to swing again, okay? So I'm still waiting for bears to, this time, 3 bear bars sideways and down is expected. I just want more from bears at this point because the bulls totally ruined their chance with bar 32 and 33. Bears are still not out of the woods yet to declare a victory, so I just need them to take out the 34 low or open to tip the scale because they're still not in charge of anything. And the bulls can still show up. All right. You all have a great day, and I will see you guys. I don't think I am scheduled tomorrow. Oh, I am scheduled tomorrow. So I'm in the morning tomorrow, and the Brad comes in the afternoon. All right, so I'm in tomorrow morning as well. Yeah. Oh, that's right. I better feed that cat. Well, I did give her breakfast, but definitely not lunch, so better do that now. Thank you. Bye, everyone.